Good morning, good afternoon, good evening, wherever you are, whenever you are. Welcome to a new DC live stream. I'm your host, Matt Batiri. I'm here with a paler, less bearded Wasim Debussy. The big boss, Michael, is here. He's back from his holiday. How are you, mate?
Yeah, mate. Very good, very good. Filling in today for Wasim, who's out partying at the moment. No, he's at an NFT networking party or something or other. So rather than him bust himself trying to get to this and drive off to that, I thought I'd step in and get on the tools and help you guys out for a change.
Yeah, he told me he put in for workplace harassment when I said the dogs were better than cats after our last live stream. So I'm not too sure if I'm going to get paid this week, but nonetheless, we're here with you guys today on a Friday. Hopefully you're either on the way home listening to us in the car or maybe on the bus or on the train. We're here to give you the latest in the crypto news, tweets, the adoption highlights, and we're going to go, as always, into the market, check out what the charts is telling us, tell us what the fundamentals and on-chain data is telling us. So without further ado, Michael's going to hit us off. Michael, take it away.
Yeah, so first one, Coinbase reports 63% drop and mid-industry slump. So cryptocurrency exchange lost more than $1 billion in the second quarter. You know, they went public in April 2021, and it was a pretty big moment for the crypto industry as well. But they've really struggled in 2022, grappling the crypto market crash, and its stock price has tanked a fair bit and forced to lay off hundreds of employees. And those struggles do continue when they recently reported a 63% decline in revenue in the second quarter, basically a $1.1 billion loss from a year ago. So it's a pretty big hit. And in the earnings call, Brian Armstrong, who's the CEO, emphasized the cyclical nature of crypto and pointed out that the company had survived previous downturns. So he said, it seems scary, he said, but it's never as bad as it seems, okay, which is a good point. And look, the bear market can be brutal, especially for those who aren't prepared. But for others like you and I, as individual investors, it actually provides the best opportunity for capital appreciation. It's good to see that he acknowledges the kind of the 4-year cycle or whatever cycle it's going to be this time around, and also that the bear markets are temporary, are part of the equation, and still remains optimistic, even with some of the stuff that's going on. So it just shows that he's been around for quite a while. Next one, the stocks are soaring. S&P hit highest level in 3 months. After a key report shows a slowdown in inflation. So stocks rose sharply on Wednesday after key inflation readings showed a better than expected results. Dow Jones up 1.63%, S&P up over 2%, its highest level since May, and the NASDAQ rose nearly 3% for its best close since April. Now, the CPI actually came in at 8.5%. I think it's down from about 9.1% from the month before. And basically, people were expecting it to be maybe 8.7, 8.8. So that's kind of provide a bit of relief in the market. But I think a key thing to understand is it doesn't mean that inflation is going away anytime soon. It's still here, it's still high, and it's still getting harder for people to afford basic essentials. Milton Friedman, who was an economist, famously said, inflation is always and everywhere a monetary phenomenon in the sense that it is and can be produced only by a more rapid increase in the quantity of money than in output. So that's basically saying money printing and quantitative easing is a really core cause of inflation, even though the US president won't admit it and keeps blaming on things like the Ukraine war and whatever else. But don't be fooled, it's definitely related to an expansion of the money supply. It is one of the reasons we're strong believers in Bitcoin and crypto, as we can go some lengths to protect ourselves from this manipulation, e.g. Bitcoin being decentralized and also being limited to 21 million coins means that it's going to be a great store of value over time, at least we believe. And just a word of warning, guys, yes, there is recovery in the markets, but we're still in recession territory. So I wouldn't be going all back in just yet. You know, we can definitely have another leg down, which would be absolutely devastating if you've gone all in at this stage. So just dollar cost average and be conscious about what you're putting in any given time. Next one, I don't know if you've heard, but the US has sanctioned basically a piece of code, an open source piece of code called Tornado Cash. US Treasury has sanctioned that. It's a virtual currency mixer, so it helps people send transactions privately through the blockchain. And so the US Treasury has basically said that they've found that more than $7 billion in virtual currency has been laundered through there since 2019, including $45 million from the Lazarus Group, which is a North Korean state-sponsored hacking group. And it says it was used as recently as last week to launder money from a heist of Nomad, a US cryptocurrency firm. So look, there's a bit of conjecture around this one. You know, how do you kind of blacklist a piece of code? But it is what it is. Apparently, Tornado Cash did try to comply with regulatory obligations, but that didn't obviously go too well, and they've gone ahead and done that. The reality is, though, you can't actually fully stop a smart contract, which effectively what Tornado Cash is. And the other thing is you know, they're blaming, you know, Tornado Cash and crypto for money laundering, when the biggest money laundering actually happens in the traditional financial system. And there's a whole bunch of banks that have been fined for doing it. So just be careful what you believe in some of these media articles. The last one on the news updates, 54% of cryptocurrency investors claim they haven't sold any of their coins. So the market meltdown in 2022 probably altered the investment strategies of a lot of people. And I'm sure some have probably panic sold and dumped their assets. However, this poll shows a significant share of investors remain unfazed by the correction, and as they anticipate a future market rally. So 54% said that they're holding on during this time. Out of the remaining 46%, 26% indicated they'd cashed out a lot or all of their crypto investments. Hopefully that's not panic selling, and some of it was, you know, prior to the crash, but it sounds like it's panic selling. And only 20% sold a small amount. So guys, in bear markets, if you're holding assets that you believe in, then you don't want to be selling them at a loss. You just got to be patient and hold on to it. If anything, if you have conviction in any of these assets, we talk about Bitcoin and Ethereum a lot, but you might have some belief in other ones. The bear markets are the best times to actually be dollar cost averaging. We actually did a coaching session to our members on how to create generational wealth during a bear market. And we went through all the lessons we've learned. And a big one is to make sure that you continue to pay attention during bear markets. And if anything, continue to invest more into those assets you believe in, because you will get the benefits come the next bull cycle. That's it, Matt. Over to you for the Twitter highlights.
Thank you, Michael. Alrighty, guys, let's jump into the tweets, which is always my favorite section. That's why I get to do it. So Chris Dunn says the 3 best times to buy Bitcoin when price is 75 to 85% down from all-time highs. If you don't want to time it dollar cost average with monthly buys, I don't agree with that. I think you should be doing weekly, personally. But and 3, during a breakout of an accumulation range. So we're going to cover this a little bit later in the fundamentals, but it is altcoin season. We're going to talk about how the Bitcoin dominance has just broken support. I'm looking at it possibly breaking the previous lows of around that 40%, which might spark a massive amount of money coming into the space for Ethereum and all its brothers and sisters of altcoins. So that's going to be really interesting. I think that, yes, over time, Bitcoin dominance will continuously go down as more coins come to market, as there's more use cases for everything else. But this is just interesting to see what Chris Dunn has to say about buying opportunities. Next one, we got Will Clemente, BlackRock. Despite the steep downturn in the digital assets market, we are still seeing substantial interest from institutional clients. So we spoke about this last DC live stream. They have $10 trillion under assets managed, which means that basically, even if they put 1% of that, man, I'd really hate to try and do maths. It's either 10 million or 100 million, one of those two numbers. We're going to see a big push in all prices across the board, because like their clients, they're probably going to recommend blue chip, Bitcoin and Ethereum, but they're going to want to dabble in some more risk. Those clients of theirs that have a bit of a risky appetite, they might go into altcoins. So we're probably going to see quite a big boom. And maybe this bear market isn't going to be as bad as what we eventually thought, the GFC might be. So a lot of people are saying that it's going to be something like the 1990s, and it's going to just be not too bad. So it's going to be interesting to see over the next few months what the economy does. Moving on to Raoul Pal, we had a massively inverted yield curve in 1990, inflation near 7%, and SPX fell only 20% and rallied as soon as ISM crossed 50 on the way down to 40. In 1982, inflation 15%, massively inverted yield curve, only 27% correction. It doesn't need to be 2001 or 2008 redux. So we spoke about this many months ago, how inverted yield curves were occurring, and this is a precursor to the recession. That word's been sort of thrown around a lot lately, especially with the last 2 quarters being downturns, which technically signifies the country having a recession. So Roll Paul is basically saying that, it doesn't look like it's going to be as bad as the GFC, as I just previously stated, and we might see something, we might have already hit the bottom in both the normal stock markets and also the crypto markets. Only time will tell. It's a bit hard to have hindsight now, but we're going to obviously see that in the next 6 to 12 months, I believe. We've got Lart Davis next. Breaking: the Ethereum merge has been scheduled for September 15th and September 16th. So they've basically finished all the coding from proof of work to proof of stake. So that's going to really change things up for Ethereum, make transactions a whole lot cheaper, which is great. But there might be obviously some more delays, a bit like Pulse X, for example, from Richard Hart. There's always delays because they find bugs, they try and fix it. They want to make sure that the A product is being released, so there can't be any sort of, issues, people losing funds and stuff like that. So this is obviously big for Ethereum, and this is why a lot of people do believe that Ethereum may take over Bitcoin as the leading cryptocurrency because of its use cases. And the word that I'm looking for that is Michael might know it. Let me just bring Michael back in. What's the word that people use when Ethereum is going to take over Bitcoin?
Oh, the flippening.
Flippening, that's the one. The flippening, where Ethereum will be flipping over Bitcoin in regards to market cap. So that's something to do. How good is it when you can just bring someone a lot smarter into the conversation and they just know exactly what you're talking about? That's why the boss is the boss. All right, guys, last one by Bitcoin Magazine. Don't be fooled. Real inflation, CPI inflation. He's just talking about how the governments give you numbers on what we think is important in regards to inflation. They might show you only a few numbers. They might just show you the cost of bread, cost of milk, that type of jazz. But really, all the other stuff is like petrol and all the other things that really they don't want to talk about, because that's going to bring the average up for the viewer doing a bit of calculation or mathematics in their head about, the inflation's not as bad. It's 2% around where they said that it would be, but really, there's all those other areas that they haven't really let you know about, and they want to keep the real numbers under the rug. So you don't think bad about them, how bad of a job they're doing managing, obviously, the funds of that country and so forth. So, look, that is it for the Twitter highlights. We're going to bring Michael back in. I'm going to move that there, and he's going to jump into the adoption highlights. Michael, take it away.
Thanks, Manny. Yeah, some really good adoption highlights today, actually. So Samsung signs an agreement to create a Galaxy NFT ecosystem. So South Korean electronics maker Samsung signed a memorandum of understanding, MOU, with 6 companies to build this Galaxy NFT ecosystem. And it paves the way for Samsung to start work on connecting the virtual and real worlds using NFTs. Remarks following the electronic goods maker's announcement, an unidentified company official said Samsung Electronics will continue to innovate the customer experience that connects the virtual world and the real world using NFT with various partners. That's super exciting. I mean, Samsung is a huge electronics company and he's building an NFT ecosystem, for God's sake. So huge news. I'm sure there are going to be other South Korean companies that will probably jump on board now, as well as others around the world. It's definitely a strong sign of crypto adoption, even amongst the bear market that we are currently in. Next one, Iran imports $10 million worth of products for the first time using cryptocurrency. So they registered their first order of the importation of goods worth a total of $10 million paid in crypto. It's an official from Iran's Ministry of Industry, Mine and Trade disclosed the information according to a report that was published on Tuesday, August 9 by the Iranian news outlet Tasnim agency. And the head of their trade promotion organization, TPO, stated on Twitter this week, the first official import order registration worth $10 million was successfully completed using crypto. This, for me, is one of the first major public announcements of crypto being used for international trade, of this magnitude. So this is really exciting. As I'm sure you guys know, if you don't, crypto is boundless, really, and there's no need to use the SWIFT system to send money across the world. So it's super, super efficient and lower cost. So I think you're going to see a lot of this start to be adopted by a lot of these global organizations, or global transactions at least. And countries like Iran and other organizations are really only just starting to realize the advantage of using crypto for global payments, like their speed, reduced costs, etc. So that's a big one. Next one, President of El Salvador, Nayib Bukele, says Bitcoin influenced the rise in tourism. So he recently spoke about the spike in tourists visiting the country despite the bear market. El Salvador has been included in the ranking of the World Tourism Organization. The Central American country jumped onto the list along with 14 other countries. And Bukele says that this is mainly due to the adoption of Bitcoin as legal tender and the promotion of sports like surfing. There you go. Only a handful of countries have been able to bring their tourism back to pre-pandemic levels, he says. The reasons behind it are mainly Bitcoin and surfing. But domestic tourism is growing even more, mainly due to our crackdown on gangs. So, look, great news, El Salvador, tourism growing. I know their GDP was up about 10% at one point as well. So that's bringing a lot of money into the country, and hopefully other countries are going to follow suit. We know the Central African Republic has been the second country to adopt legal tender. It's really only a matter of time before more dominoes fall on that regard, and that's going to rapidly increase the adoption of Bitcoin and crypto in general. So really exciting. Last one for the adoption highlights. We actually had a stack more, but I've just filtered it down to 4 for today. Over 39,000 cryptocurrency ATMs have been installed worldwide. So that number is massive. Since January 2017, when the count was only 1,000 machines, the number of crypto ATMs have grown by nearly 4,000% since then. So saw exponential growth, particularly in the last 24 months since September 2020, when there were less than 10,000. Yeah.
You're back. You're back.
Yeah, I dropped out.
All
Looks
good.
like we're the only one with the internet issues.
Yeah, Wasim's hacking, guys, from the NFT because he wants to keep his job. So do you want to follow? You said something about 1,000 machines. You're up to here.
Yeah, okay, and just grown by 4,000%. And I just was going on to say that huge growth in the last 24 months, up from 10,000 just 24 months ago. And that, imagine going in to use an ATM and seeing a Bitcoin or crypto one next to it, or one day having them all integrated into one. It's going to be pretty cool. And I just went on to say that, Bitcoin's probably more like wealth, to be used more like wealth preservation, whereas stable coins and probably some other ones will be used for day-to-day transactions. So yeah, it's going to be interesting to see how that all plays out.
Awesome. Perfect. Alrighty, guys, we're going to move on to everyone's favorite part of this DC live stream, which is the market analysis. Hopefully I don't have any tech issues. Looks like I've got to refresh the page. Let me reload that. Always happens when you're live. All right, let's zoom out, because when in doubt, always zoom out. Let me remove some of these awesome drawings that you guys have bloody got no idea what it means. Alrighty, so what we can see is right now Bitcoin is in this big ascending wedge. Alrighty, now normally these ascending wedges are bearish. When you tend to get close to the end of the wedge, we do break down back to the bottom of the range. Now, we keep saying to you guys over and over, we don't think that the market bottom is in, but like anyone, we can always be incorrect. However, things that I will point out just after this chart, such as in the fundamentals, tell us that maybe we still have another leg down, and this is obviously just a relief rally. So I do think that we are going to continue moving towards 26,000, 27,000 in the short term before we do break down. But if you are someone that likes to do a bit of technical analysis, we can clearly see that we have a resistance line at the top, we have a support line at the bottom, and we're going to probably just continue to see bounce between these two lines until we hit a target. And when people believe that, hey, Bitcoin's at a fair price, especially being in a bear market, let me sell off some things and maybe make a little bit of money that I lost during the initial start of the bear market. So we have the 20 EMA and the 50 EMA looking like it wants to cross over in the next couple of days. History tells us when these two exponential moving averages do cross over, we tend to get a pump. Here's the last time it occurred back in March. Earlier this year, we did pump up about 17%. The next one was back here where we had a great pump from 45,000 to obviously 69,000. And then we had another one back here when we were at 35,000 all the way to 52,000. So if these two moving averages do cross over, expect some price going to the upside. However, If they don't cross over and they stay separated and the green line does roll over, it's going to probably cause that catastrophic collapse that we've been talking about. So one more thing that I do want to harp on about is the hash ribbons indicator. Let me just remove all these other indicators. Now, the hash ribbons indicator is showing that miners are coming back online. The furthest the two distance were from each other was at the start of this month on August 2nd. These two lines are now coming closer together, which means we're going to probably get a buy signal, which looks like this very soon, which is also sometimes a good indicator that a lot of traders use to see, hey, the market looks like it has bottomed in the short term. We're probably going to push to the upside. And I think I mentioned this at the last DC live stream. My ultimate target, if we get a really good pump, would be the golden pocket back up here around $50,000, because Bitcoin on the previous bear market did have a great rally back to the golden pocket, which was about $14,000. Bitcoin could do this time. It would surprise me if it did. But hey, at the end of the day, if the price goes up and I'm wrong, I'm still a rich man. So at the end of the day, guys, just make sure you're doing technical analysis. Feel free to learn. We teach it inside of our courses, both Decrypting Crypto, 1K Day, and Millionaire Club. So if you want to learn how I do all these fancy looking bright color drawings, feel free to join in. All right, so I spoke about this at the start of the stream, that it is altcoin season. It was something that I did speak about last DC live stream. The last DC live stream, I'm pretty sure we're about 40, just under 50, right? And I was like, hey, things are looking kind of like altcoin season at the moment, even though this graph didn't show it. And there you go. The following, 4 days later, we're at 90%, basically saying we're in altcoin season. So what is normally a good indicator is you tend to look at the ETH BTC ticker on TradingView, and we clearly see that basically Ethereum's been on a big run. Ethereum is technically an altcoin, so there's a lot of altcoins that follow suit with what Ethereum's been doing. So if you've been sort of looking at some of the your coins, especially if you're not in Bitcoin and Ethereum, maybe you've had some really good returns over the last couple of weeks because Ethereum's actually been booming. It's caught up on Bitcoin about 2.5%. Which is obviously a large move, and we've seen this right here. Moving right along. Okay, so the stock to flow model. So this is a stock to flow model that is colored. And the reason I'm bringing this up is because normally what you'll tend to see is in the bear market, we are in the dark and light shades of blue, right? And you can see here the last three bear markets are colored in blue, and we have not yet had any blue on this current map. Now, this is another reason it's telling me I'm thinking we possibly will have another leg down, because if right here this was the bottom, it would be obviously in dark colored blue, but we can kind of see with the history that these greeny areas to aqua areas haven't really been the bottom. So I think this is just going to be one of those relief rallies that we were looking at when we were at about $30,000. At about 30,000 people like, hey, we've just come down about 60% from all-time high. We surely are going to get a bounce soon. A lot of people obviously went long and got wrecked even further when we went down to 17,600. So I do think we could be in for a good couple of weeks and months here, but I still don't think that this is the bottom, and this is just one of the other indicators that I tend to think about when I'm making my decisions. Hey, have we bottomed? Should I worry about dollar cost averaging right now, or do I think I can get some better prices being a trader? Obviously, being a retail investor, if you're dollar cost averaging, it shouldn't matter what the price is. You should just have your set day each week that you purchase it, no matter what it is, transfer it off the exchange onto a hard wallet and just lay on your nest egg over time. The fear and greed has been popping up. It's at 42 now, which is good, which means we're getting very close to that 50%, which is going to move us into the greed category. And look, if you're someone that doesn't trade, you could literally just go to this chart, go to this URL, look into bitcoin.com. Whenever you're in the green, start selling or dollar cost averaging out. Whenever you're in the red, start dollar cost averaging back into the market. So this is just something really simple that even if you have no idea what all these candles and drawings and shapes all mean, you can simply just go to this website and go, all right, I'm going to do myself a deal. Every time it's in the green, I'm going to take out 1% of my entire portfolio until we hit a max. Once I start seeing orange and red dots, I'm going to start buying back in nice and slowly into the market. Alrighty, we're going to look at some on-chain fundamentals. We can see that the percentage balance on exchanges of Bitcoin continuously drops. So we can see right now that the price is going up and the percentage of Bitcoins on exchanges is dropping. Let me zoom in a little bit so you guys can see a better view. Now, we tend to see a bit of an inverse correlation with these two lines. When we start seeing this line go to the upside, it means people are sending coins on exchanges. It usually means they're going to probably dump the price like what we did back here. So coins on exchanges increased and then price dumped. Same here. Inflow increased and then we had a bit of a dump. So right now price is going up, things are looking good, people aren't wanting to sell because they want to sell at a higher price. But once we see an uptick in this line, that's going to be okay, my spider senses are tingling, and those whales are starting to make some moves very shortly. Last one we have here is the reserve risk. Basically, we've talked about this one before. I've got another 6 or 7 charts very much like this that show, hey, we're in the green. It's a great $100 cost average because we're at the bottom of this cycle, and this is a great buying opportunity. When we're getting close to the red band up here, that's a good time to start selling because we're close to the peak of the market. Obviously, this actual chart, we never really reached that on this bull cycle. So our whales now starting to manipulate what they're able to do with fundamentals because they know how it works. They know how it's being perceived on websites like Glassnode. So can they start spreading a lot of their wallets across exchanges so they don't get flagged by people that actually follow these large wallets? Because people do that. As soon as they see a large wallet starting to move money and coins across exchanges, they start thinking, hey, I'm going to time this I'm going to time this dump now because obviously I'm going to these guys are moving their money, so they're going to probably start dumping the market. I'll dump my coins first and the whole process starts. So we do have a bit of a trend line. I can't draw on this chart, but basically if you drew a trend line from this peak here to that one and that, we are getting a bit of a downward slope. It doesn't look like we would have hit and come anywhere near that trend line on the last bull market, but this is good enough for me to say, hey, look, now is a good time to start getting back into the market because we've kind of bottomed out. So guys, that is it for the fundamentals. I'm going to bring the boss back in. He's going to talk about a couple of breakout solutions update. We've got some really massive things coming up next week for our clients, but because Michael is back on holidays and feels like being Father Christmas during August, I think he said he's going to invite you guys to a special event next week. So, Michael, why don't you tell us about it?
Yeah, I'm going to make my mark coming on the live stream today, mate. I've got to bring something special on. Otherwise, what's the point? So, yeah, instead of look, we're doing the standard 1K Day Club workshops next week, which if you're not a member, they're a good one to attend. But I thought it'd be really good to change it up a little bit and give you guys access to a sneak peek to actually what we do present on and what we do cover inside the 1K Day Club. So we're actually doing an update for 1K Day Club members on Monday, and there's some really, really exciting stuff going on there. So it's normally exclusively for 1K Day Club members, but we are opening it up. We are giving you guys a chance to come in and kind of see what it's about and some of the stuff that we deliver. So got some really exciting updates on some of the DeFi protocols that we do offer and support inside the 1K Day Club. We got an awesome new inclusion, which is a mini version of our mirrored portfolio. So I can't wait to release this to our members. It's probably the highest value service that we provide in our Millionaire Club, and we're coming up with a version of it for our 1K Day Club members by popular demand. I wasn't going to allow a service like that to be brought into the 1K Day Club, but I was convinced because there's just so many people that wanted it. And so we've come up with this cool little mini version. I'm going to be talking about basically how I went 6 weeks around Europe with my partner for free, using all my profits from crypto and all my DeFi protocol income. So I'm going to be talking about how you can spend your crypto and how you can actually do so whilst maintaining your privacy as well. So that's an awesome one for you guys to be in on. And I'm going to be making a pretty awesome offer as well for anyone who's not a member of any of our clubs. So if any of this interests you, then I would 100% jump onto that. So I think Matt's put the link there, breakoutnow.co/1KD-update. So jump on that. Jump on. I think it's Monday evening Australian time. Even if you can't attend, just register and we'll get the replay out to you. And looking forward to seeing a few new people pop in there. So that's all I had, Matt. Did you have anything else you normally talk about?
No, I'm just really excited, like you said, about the mirrored portfolio. We've been sort of killing it this last month, even when the price action has been crazy. I think we're up 13% in the last 2 months, which is pretty good. I think most hedge funds and people that you give money usually to invest in, as soon as they make that 10% in a year, they just sit back and happy to not work for you. So we're doing pretty well in just 2 months. So Look, past performances aren't a predictor of future performance, but the account that we opened last year is up 90% compared to Bitcoin. So if last year's performance is one thing, and then we've obviously hit the ball running this financial year, up 13% already in 2 months, I think that should say something to our followers. And as a ex-business owner, really looking forward to that privacy card that you've mentioned to me, but we've got to keep the lips sealed at the moment with how good that one is. So if you want to see what it's about, guys, join us on Monday, 7 p.m. Use the link there. You'll be able to see what we normally present month to month for our members, and it gives you a bit of a sneak peek of what some of the products and services we have here at Breakout Solutions.
Yeah, just one thing to add there as well, Matt. The mirrored portfolio actually since launch is up over 10x. So that was in December 2020. So we did launch it before kind of that bull market kicked off, but that's still up around 10x. So it's done really well. Obviously, can't guarantee it we're going to be able to do anything like that in the short term, but we always say look at your crypto investments on the 3 to 5 year cycle normally, because then at least you give yourself a chance to catch at least one bull market, and you'd be very surprised what you can achieve in terms of profits during a bull market. So yeah, excited to run everyone through that on Monday, and that's it, mate. We wrap it up.
Well, thank you. Thanks for filling in for Wasim. And Wasim, if you're watching, I miss you, mate. I'll see you on Tuesday.
Thanks, guys. Catch you then. Have a good
weekend. See you guys. Bye. Enjoy your weekend.